So we're good to go. There we go. Now you can hear me. I have two mute buttons. Can you hear me now okay? Okay, great. All right, so I'm Tricia with Easy E-mini Trade. Maria's with Trade Order Flow. We are two separate companies. I use the product and I don't mind doing webinars, so that's why I'm doing it. So I don't have anything to do with Trade Order Flow. If you have any questions, you can direct them to Maria at tradetheeminis@gmail.com. You can visit her website at tradeorderflow.com. So I'm sure you've read the disclosure. Basically, don't trade with money you can't afford to lose. So today we're going to go over trading, order flow, and value areas. And I'm going to show you how I implement those items into my trading. There are lots of different ways that you can use the tools. So you're going to just basically see how I use them. So most of you are probably familiar with the market profile, and you're probably used to seeing the vertical graphic with the alphabets laid out, the letters of the alphabet laid out based on the time frame that you choose. And this allows you to, at a glance, to see the volume at the different price levels where you have majority of the volume trading. And in the tools that we use, we can use the market profile based on the VWAP, the volume weighted average price. That's the one I like. You can use TPO, time price opportunity, or volume. Like I said, my choice is the VWAP. I prefer that. If you want more information on market profile and so forth, you can go to the cmegroup.com website and just do a search for market profile, and you'll see that there's an interactive tutorial there that you might find helpful, because let's face it, there are whole huge books written on market profile. So in an hour I'm going to just show you how I'm using those different levels, but to go into great detail, you definitely need to spend a lot more time than an hour. And then the other book that's pretty decent is Mind Over Markets by James Dalton. That one's a little easier to read than if you get Peter Stadelmeyer's book, in my opinion. And I'm sure there are some more recent publishings out there as well, based on more current time frame. So this is probably what most of you think of when you look or think of market profile. So you can see here at the different price levels, and this isn't showing today. This is showing basically, you can't see Monday here, but I'll show you here in just a second, but Monday and Tuesday, and this is Monday and Tuesday combined. So you've got the different alphabets, the letters of the alphabet showing the different periods that it represents. So this at a glance, you can see where you have high concentration of volume for the week, up in this area here, in this area here. And if I was to squish it up a little bit, this is what it would look like. There you can see a little bit more of the concentration of the price levels where we have the most volume. The pink outline is the fair value area, and I'll go over that in just a second. So in looking at this, it would be hard to trade this, for me anyway, looking at the market profile like this, other than mapping out the different levels where you have the high concentration of volume. That's helpful no matter how you trade, whether you're using market profile or not. This is a lot easier to look at for me. So the colors that are based on this chart here, they're based on the market profile. So I'm just going to go over what you're looking at here, and then I'm going to just jump right into a bunch of examples and how I like to trade them. So the yellow area is the fair value area. The fair value area is where 70% of the volume up to that point has taken place. So it's constantly changing depending on how the market is moving. So it's dynamic. It's not stationary or static. It's moving as price is taking out the highs or lows and creating a new range. I have right here where the yellow meets the blue, I have the high value area. Then I have the second high value area here. Down on the bottom side, I have the low value area, second low value area. And right in the middle, you're going to find your point of control or VWAP, depending on what you are using. So that runs smack right dab in the middle. Above everything here, these red crosses, that's yesterday's high value area, and this blue dot is yesterday's low value area, and it'll give me everything from the previous day if I choose to. All this is customizable, so I can look at as much or as little of these reference areas as I like. I like to have them on there, and this green dot is yesterday's point of control. And this isn't based on yesterday, this is just an old screenshot that I had where I already had everything outlined, but you'll see current examples though in just a couple minutes. Over here on the right, this black outline is cumulative volume, and this will take into account a few days, depending on how many days you're going to load onto your chart. And then the area over here that's in color, this is the current volume at the different price levels. And what you're going to find when you're trading using the market profile is that you want to pay attention to the high value areas and the low value areas and the point of control. So basically what you're looking to do is take trades in those areas. What you're going to find, if price is pretty sideways, you're going to find that these value areas and the fair value here is pretty flat. Like if you were to look at these just look pretty flat and sideways. If we had a strong trending move or a strong trend for the day going on, these would be angled just like a moving average would, if you will. And when price is pretty, or the market's pretty sideways, what you're going to find is that price is going to keep trying to find its way back into fair value. And if it's pretty sideways, you're going to find that price will generally go from the high value area down to the low, back to the high, down to the low, back to the high. So great, right? That should be pretty easy to trade. But how do you know that it's going to hold those areas or it's going to break out of those areas? And this is just a stochastic. I know Maria's going to cringe when I tell you about it, but I like to have a stochastic on my chart, and I'll show you how I can use that to my benefit at these different levels. So this is just at a glance what the different levels are. It'll mark the high of the day. That's what this is here in black. It'll mark the low of the day. It's not showing up on here because it's below this, but it will mark all those reference areas, like I said, as you see fit. Let's see, Mike is saying, why is there a range for low value area when it's usually a single line? Because there's two. There's two deviations here. We have the high value area 1 and 2. I like to see them both. It's totally up to you, Mike, whether you would want to see both or not. I prefer, because you'll find that you're going to get this area also to hold the second high value area. So it's just built into the software. So what we do in these areas, I'm going to just show you here. If everything is flat, like I was just saying, what will happen as price trades up to the high value area is it will either consolidate and roll over, find its way back to the point of control, and then back to the low value area. Then the low value area will generally, price will consolidate there, find its way back to the point of control, and then back up to the high value area. When it comes outside of this fair value, you'll see here, for example, that it keeps going up to the next high value area. Once you start breaking outside of the color areas, you'll find that price is going to keep retracing, if you have a strong trend, back to this high value area or back to this high value area. And I've got plenty of examples to show you guys those in action. So I'm going to start out right off the bat. I'm going to show you some examples. Then I'll bring up my live chart. The reason I'm doing examples like this in screenshots is because obviously there's not going to be much going on in the market right now. So difficult to show price action on order flow if there are no orders coming in. So that's why I'm doing this, just FYI. So this is crude, and this is from Thursday. Is it Thursday? What day is this? Actually, I think this is yesterday. Yep, yesterday. I started out with Thursday, and then I threw everything away because I wanted more recent examples. So I've got them marked at the areas where we can actually look for trades. So up until this point, and this is early, this is 4:30 this morning, 5 o'clock this morning. Some people trade very early, some don't. Either way, you're going to apply the methodology the same way regardless of what time of day you're trading. So if it's flat like this, you're looking for it to go from one side to the other, one side to the other. Now, what will happen is eventually it will likely break out of the range and likely start moving in a direction. That's what we hope for. Either way, it doesn't matter. We can trade in a sideways market. We can trade in a trending market. So right here, as price pops up above the fair value area here and retraces back to our high value here, I could buy this or I could short this expecting it to find its way to the low value area. So how do I know what to do there? Obviously, you can take a guess and assume it's going to hold or assume it's going to break out based on previous resistance areas above you and support areas below you. So right here where I have this marked A, this is the order flow at that time. And I have this set on a 5-minute chart, and you can set this on whatever you like. I have an 8 range over here for my market profile chart, and then I have a time-based chart over here. You can do 2 of the same. You can do tick charts. You can do a time-based chart on your market profile chart. Whatever you like. The levels are going to be the same. It's based on price. So it doesn't really matter. It's whatever you can stand to look at. So this is what I like. On the NQ, I'll use a 3-minute generally on the market profile chart because it doesn't really matter to me what the bars are doing as they're forming. Mainly what I want to see is I want to see what the delta is doing, and a simple explanation of the delta is the difference between the orders coming in at the bid and the ask. So if I have more sellers, for example, on this bar here, I'm going to have a negative number. If I have more buyers, I'm going to have a positive number. I have the volume based on the bar, and then I have the cumulative volume. This also is all customizable on what you want to see or not want to see. I don't care about any of the other items except for me, I want to see the delta. And over here on the left, this is also volume at these different price levels. And I'll show you on a live chart here how you can make use of that as well. And also the way that I view the bars here, again, customizable. This is how I like to view it. I like to look at the bid-ask histogram because I can see at a glance where the highest concentration of volume is occurring within each bar here. If market's moving fast, in my opinion, for me anyway, it's almost impossible to keep up with what's going on at each separate price level. I find that nearly impossible, and probably most people would agree. If that's not the case for you, then that's fantastic. You could trade right off of your order flow chart. So looking at A here, when price retraces back to this high value area, I have to decide, okay, am I going to try to buy that or am I going to try to short it? Now usually you will have plenty of time to make your decision because it usually won't just hit once and give you a one touch and then take off higher off of there. Usually you have a couple bars to make your decision. So as this is approaching my high value area here, if I was thinking that this was going to go lower, then I can watch for my order flow, I can watch for the delta to be getting bigger. So I realize that this is static right now, but at the time, when you're looking at this live, these numbers are all moving. And so chances are that this started out probably much higher negative, and then it started to, like, let's say maybe it started out at, minus, 400 and something. And as the buyers are coming in, this number is going to get smaller. So I'm not only looking at the delta, I want to see if it's getting smaller or bigger. So if the delta is negative as it's coming down here, retracing to the high value area, if this was negative and getting bigger negative, then I would be inclined to try to short that. But if this is negative, but it's not getting bigger, it's getting smaller, then I'm going to be more inclined to try to buy it. And if you're worried about it, then you wait till the next bar, and you can see that we wind up going, positive. So you can wait to take the buy off this area until price bounces a little bit and you get the delta going positive and getting bigger. Excuse me, you guys. And on my 5-minute chart here, I do have the value areas showing as well. So you have the option to put them on there as well. And then the areas that are showing here in red and blue, these are going to mark previous swing highs and swing lows. And again, I choose to view them. You don't have to view them. Joe's asking, what's the indicator on the left side of the chart? Over here, Joe? Oh, JR, sorry. JR, are you talking over here on the far left side in the chart? What is the indicator on the left side? Of which chart? Of this chart right here with the order flow? This is going to be volume at price. So this will tell me the different volume at each price. And these are the value areas as mentioned. So if you want to type something else in if I'm not understanding, the blue and the yellow. This is the fair value and high value, low value. So fair value, you might have come late. Fair value is in yellow, and then outside the first high value area line will go blue, and then this will be the second high value area. This is fair value, low value area right down here, and when it goes outside that, that colors it blue, and then this would be the second low value area. So it just makes it a nice visual, at least for me it is. And you don't have to use that. You can use plain old lines. You don't have to use the colors, but I like the lines. I think that's easy, and a nice easy visual. So here, because I'm not getting a very large negative delta number, I'm likely going to try to buy this. Now, like I said, I can wait until I get this green bar to close here. You could be very aggressive, just have your order sit there as a standing order for a buy stop. However aggressive or conservative you want to be. I would, for me, probably be a little bit more conservative, and I would look to enter in above this green bar here, right there. And then so it pops a little bit, and these are the highs of the day at that time as well. So we get another pullback to fair value area. So generally, we're going to keep finding our way back to fair value. So we find our way back to the fair value area here. And you can see we're starting to get a little bit more of a slope there. So chances are, again, I have to decide, is this going to hold here and I'm going to try to buy it, or am I going to try to short it? So here is B. So this is the bar that was forming at that time, right here where B is, right in this area here. And so you can see we go negative delta minus 121, minus 96, then we wind up with 72, positive delta. Now, keep in mind that this is all happening pretty quickly, and in this case, we only do get a 1 touch there, so you may have passed on this because you weren't too sure how it was going to behave here, and then you were thinking, okay, well, I'll let it bounce and then let it retrace, and then I'll look for another, opportunity there. But you never get another opportunity. It never retraces there a second time. So you either jump in above this bar here because this is positive, or you wait and you wait for another retracement. So again, it's going to depend on how aggressive you want to be. So as this pops here, right here, you can see it. So it pops higher. And the other thing you can do is you can always short the top. Now, I don't recommend doing that unless you have a pretty sideways market. If you have a strong trend and you want to go against the market, let's say, so let's say we have a strong trending market higher and you're thinking that you're going to short off the high of the day there. What has to go through your mind is, okay, if I short this off the high of the day, you would be looking at, possible retracement to, back to that fair value area. Obviously, there's no guarantees. When you get a really strong trend happening, what you'll find is that price will trade outside of the blue area and then just keep retracing back there. And hopefully I'll have an example of that. I don't remember if I do or not. So I never get the opportunity, based on how I like to trade, to buy here. So I'm waiting for another opportunity. So we retrace back to our high value area here. You can see we're getting a pretty good slope here. It's no longer really flat. So I'm looking to probably buy here. And you could still watch for your support and resistance areas if you draw them, and you can watch for bounces off that and incorporate your order flow into that based on the delta. Maria, are you going to answer these questions via the keyboard? Michael's wanting to know, can you put the delta in the histogram? And over here on the left, I believe you can, Michael. You can actually, and I'll show you too, you can actually use the delta in these bars if you prefer, instead of the actual numbers of orders coming in at the bid and the ask. So I'll show you how the choices that you have for that. So a lot of people like that. This is how I like to view it best. So on the retracement here to D, actually what I wanted to start to say was up here at C, I started to say you could short off that. Now, like I said, I wouldn't go against the overall trend, but here's where my stochastic comes in. So I've got my stochastic here, and it's just a plain old stochastic, and the settings are 14 and 3 on that. And I have divergence here. I have higher high in price here, while here on my stochastic I have a lower high. So if I wanted to be aggressive, if I saw sellers coming in, I could actually short off there, which would be here on this bar. And you can see that we actually do get some sellers coming in. But again, that's obviously a lot more aggressive. And if it's flat, if the market's flat, then, no problem. Short the top and buy the bottom. But here it's still questionable because we started a trend, a trending move higher, at least for now, until we start taking out all these swing lows. But if you wanted to be aggressive, using that stochastic to take divergence trades at the higher low of the day can be really helpful. So here you can see that you've got negative delta here. And what you would do is, like I said, you would be looking at it to retrace back to the high value area, right back to fair value. So again, that would be an aggressive opportunity. So when D right here retraces back to the high value area, I'm looking to probably buy it, right? Because we've been holding that high value. So now I want to look for buyers coming in. So here is D on my order flow chart. And you can see by looking at the numbers here, if you are looking at the past bars, you can see we had negative 378 here. Then we went to negative 137. And then as we're breaking this high value area, that's the same as this high value area right here. As I'm breaking this line, you can see I've got some sellers coming in, but they're not stepping in here, and we've got positive delta. So as long as this is positive and getting bigger, or negative and getting smaller, smaller being like this. So let's say it started at minus 378 on this bar, and now it's, you can see it going into the positive. Even though the number might not be that large, you know that it's at a level that's probably going to bounce. So you could go ahead and buy that. You can wait until it gets back above the high value area and buy it. Again, you could be aggressive and put a buy stop right above that. Now the bars that you're looking here are chubby bars, Gary. So that's why they are skinnier and fatter. And this is one of Maria's tools. As you get a bunch of buyers coming in, you're going to see that the bars will get fatter. And this is an add-on. It's not actually part of the actual software. But she's actually going to offer those for free to anybody who gets the tools. So you'll see it getting fatter when you have buyers coming in, or if you have more sellers coming in, you'll see the bar getting bigger and fatter red. So here, that's why these are skinnier, not a whole lot of buyers coming in. So D here, I can buy above that high value area. Right? So basically what you're doing is you are establishing the levels, the software is establishing the levels, and then I'm just looking for confirmation on my order flow chart. Now I want to just show you real quick how I use this. So this is real time, and then I'll go back to the examples. So obviously we don't have a whole lot of action right now, the market's closed, so Globex is open, but there's not going to be much going on in the NQ at this time of day. But what I do is, now I'm going to just kind of scrunch this together here so you can see. And I'm going to just scroll over to the left here a little bit. I don't want to get rid of my bars completely here. So I'm just going to scroll to the left like this morning, where we have more volume coming in. Okay, so this is this morning. Now, we're pretty sideways all morning, and what I'll do is I'll watch these areas. I'm just going to scrunch it so you can see it just a little bit more. I'll watch the areas within the bar where I have the highest concentration, and what I'll do is I'll go ahead and I'll mark those. So I'll just put a line wherever I see, not so much when I have a whole bar that has a lot of volume on it, but like when you have a bar that's pretty scarce, and then you've got one spot where you've got a lot of volume, like let's say right here, for example, right there, or right there. And I can tell because I've got my histogram within my order flow bar here telling me that. Right? They're pretty easy to see. When you're chopping sideways, you're going to have lots of them around. But when you have a trending move going on, they're going to be a little bit more sparse. So then what that's telling me is that when price gets to that level again, it's probably going to have some trouble. So like right here where I just marked this high concentration of volume, right here, you can see it didn't really get through very well here, and here it got stuck there again, and that's basically the area where it was bouncing off of. Here I marked some high volume, and then you can see as it traded down to the high value, actually low value area here, tried to get through, but you just didn't get a bunch of sellers piling in down here. So as price hits those levels continually, and you have high concentration of volume within these bars, that's where price is likely going to have trouble getting through. And what you'll find is if you use support and resistance, you're going to find that those are going to be in the areas where price is establishing intraday support and resistance as well. Here, I'm going to just scrunch this up so you can see. Here's the volume for the morning here. And this is the way that I like to view it. Again, you have lots of different options, but so this is telling you with all this concentration of volume in this area here that the likelihood of any trades that you take in this area, you're likely going to get stuck. you're probably not going to get a lot of follow through unless you're planning on shorting the top and then buying, the bottom at support, wherever that is. So when you see this, when you don't have a whole lot of openings in between these areas, that means that price is going to have a difficult time. It's just telling you basically chop in this area. Lots of volume is spent here, so likely that you're going to have a difficult time with runners unless, like I said, you short the top and buy the bottom. So looking here, I can choose, I've got, like I said, bid ask histogram. You can choose bid ask if you prefer. You can choose delta, so it's just telling you the delta at each price level. You can use graduated volume. You can use delta colored volume. You can use just volume histogram. And for me, that's what I like. And then the same down here. You can choose to show as much or as little information down here as well. So you see I have the total delta. You can put the session letter if you want. Remember that market profile screenshot I showed you with the alphabet? So you can put the bid and the ask. You can put maximum delta, minimum delta, cumulative delta, delta and volume. The list goes on and on. So once again, all customizable. And then also over here, if I don't want to show the swing lows and swing highs, that's what these areas are here, I don't have to put them on there. Like I said, it's my preference, so I like them there. I can put this over here. I can put all this on the right side. I don't have to look at the volume. I don't have to look at the different volumes at the different price levels here. I can just have the histogram. So again, totally up to each person. So I'm just going to move that out of the way. So like I said, D, you could buy. And then what I would be doing is I would be looking at this area here to see if, okay, if I don't have a bunch of buyers coming in up at this area up here, then chances are it's going to pull back again. So that's a decision that you would have to make. Are you going to stay in and sit through the pullback or take your profit and then just re-enter? Again, everybody's trading style is different. This is an 8-range chart, so somebody might use something bigger, somebody might use something smaller, or use a time-based chart, but it's going to be the same. If you're at the high value area, even if you're using a 1-minute chart, you're going to want to see the buyers stepping up there before you try to buy it. So we get our retracement back to the high value area here, and once again, I have to decide, am I going to try to buy it again? Now what would be going through my head based on this last screenshot here is I would, just in the back of my mind, I would know, okay, we took that buy here, I took my profit, let's say, and then I move my stop to, my entry area, and I get stopped out at break even on anything that I'm holding. So I get my first target, and then I'm hoping for a runner, let's say. So as this approaches the high value area here, and we're not getting buyers coming in, I know I've got the high of the day there. I look to the left and I can see I've got some congestion here. So if I'm going to try to buy this again here when it retraces at E, I'm going to know that it had some difficulty getting through this last swing high area. So I know I can attempt it once again, and then I would just have a heads up waiting for buyers to come in, up in that area. So looking at E here, you can see this is E in this general area here. So I have, prior to that, I have negative delta 235, negative delta minus 156, and then it goes to positive 174. And then we get positive 393. Now keep in mind these are all moving, so this chances are at this low number 174, it started out as a negative number and it's been getting higher. It's been getting to be more buyers than sellers. So then on the next bar, when I see that there's still buyers coming in, I can go ahead and I can buy that. I can buy it, however I want. I can buy it above this bar here. I can buy it above this bar here. I can buy it again at the high value area. Mainly what I want to see is I just want to see that I have green coming in. Now when this is forming real time, you'll see flashes of a lot of green coming in or a lot of red coming in. So let's say that I was going to try to buy this in this area here, right here at the high value area, which coincides with this right here. You can see what will go through my head is, okay, we had sellers down here, but they couldn't push it lower. They had sellers again, they couldn't push it lower, and then we had the buyers step up. Down here, again, we're not getting any red, so I would feel okay to try to buy that. And then, like I said, I would be viewing this area here based on looking to my left over here. Remember we talked about it? I would want to make sure that I saw some green coming in there. If I was approaching that area and I saw some red, I might tighten up my stop or adjust my target area. But once it gets through, you can see that we're getting some big numbers here. We're getting our delta to increase here. You can see 862, then it goes to 147, and you can see that we get this pop here. Now you know that you're going to get a pullback. It's just not going to keep going and not pull back. So now you would be waiting for a pullback. For me, I would be waiting for a pullback to the high value area or an area of support based on previous price action. So here we get the retracement, but it doesn't quite hit the high value area here. So I'm not really interested in taking that as a pullback. Some might be. That's, again, up to the individual. But you could also take it when it breaks this high value area, the second high value area here, if you like. Now, keep in mind that unless we have a really strong trending move, it's likely not going to move too far away from this high value area here. It's more likely to give you a bigger retracement. So I can wait for the bigger retracement, or like I said, somebody else might jump in here. I tend to be more on the cautious side. Now, remember what I was saying about not shorting against the overall direction of the market, especially on CL. I'm not too keen on that. If it's got a strong trending up move, I'm not likely going to go short at the top. But here's a good example of divergence. We've got a higher high here than here. I don't have a tool that I can draw my line on here. So here you can see higher high here than here, while on my stochastic I have a lower high here than here. So as this is approaching this area here, I already know that I'm probably going to get a pullback just based on divergence. Obviously I don't know where it's going to pull back to. The last one failed to pull back to the high value area. So here I can wait to see if I'm going to get my pullback to my high value area, and then hopefully there's some buyers stepping up. So again, aggressive would be, again, shorting up here. Excuse me, on that divergence, or waiting for the pullback. So waiting for the pullback down here at H. Now I just want to show you this divergence up here, and you could literally short the top here. There's no divergence. Again, how aggressive you want to be. If you see sellers coming in, you might be willing to short that, anticipating it finding its way to the high value area. Basically, you're just capitalizing on the pullback if that fits your trading plan. So you can see we had a big number here of buyers, then it's decreasing, right? And right here is where F is. So you can see it's big and it's positive, smaller positive. So you can see that we have sellers coming in just based on these last two bars looking at our delta. And so then here we get a negative delta, which is telling us that we have some sellers coming in. You can look for imbalances. Imbalances meaning this is red on a diagonal also, which I failed to mention. So let's say that you have a big imbalance. Let's say that you have, let me find one here. Here's one here, 467 buyers to 191 sellers. So that's telling you that you have an imbalance of more buyers, right? Where the rest are pretty close. They're not, you know, too far apart, but that's a pretty big imbalance. So that basically would give you a heads up as well that price probably has a pretty good chance of moving higher. Same down here, you can see 505 to 224. Excuse me. So you could short the top here or short the top here. And again, you have divergence. Here's that G area with divergence, and you'd want to see the sellers coming in if you were going to do that. And you do see the sellers coming in here. That's right around here. So you see the sellers coming in, then like I said, you would be anticipating it finding its way back to the high value area here, which would be right here. So you can see H right there. So we're anticipating a bounce, right? Because at this point we know the direction is higher. We have a pretty good slope on our market profile. So at H there, I want to see some buyers. So I'm not ready to buy here yet. You can see looking at H here, we have negative delta. And this is off the open, you guys, at like 9:30. So I'm not sure that somebody would be interested in trading right off the open. Everybody's different, so just stick to your plan. So anyway, right here at the high value area, I have a huge negative delta here. So I'm not willing to buy that, but I'm also not ready to short it because looking at our other charts, you know, we've been moving higher, right? So I'm not ready to say I'm going short there. So I'm still waiting for it to decide what it wants to do. Is it going to bounce here or consolidate and then roll over? So I'm watching and I'm watching, and so I'm not going to short it. But now I can see I don't really have much of a negative delta here anymore on the next bar, right? So that would be like right there. So I can see that that's actually not that negative anymore. So that's telling me that I have buyers stepping in. So now I can go ahead and buy it. I can buy it above this area here, this bar here. I can buy it above this bar here if I want. Basically, I just want to make sure the buyers are coming in. And you can see right here at our high value area, we get that big concentration of buyers coming in there. So that is telling me, you know, I can buy it. And I'm always going to be aware that the high of the day, basically you can see it right over here where this black line is. So if I were to buy here, I'm still going to be aware that I might get stuck there at that high of the day, or, you know, the swing high here. So, you know, plenty of room for a target. Figure this, each bar here is 8 ticks in price. So, you know, there's plenty of room there. And then once again, if you want to short the top, you've got equal highs here on price. Well, on my stochastic, I have a lower high. We got a topping tail. So picture perfect. You can short that, anticipating it finding its way to the high value area. Again, you're going against the overall market direction. So you're going to be a little bit more on the cautious side. So then we break the high value area here. Now I'm still not interested in shorting for myself. I'm not interested in shorting because overall, you know, we've been moving higher all morning, pre-market and then off the open. So I'm not interested in shorting that. Somebody else, if they see a bunch of sellers coming in, they might be interested in doing that. So here is the bar that's forming right here on J. And you can see, oops, you can see here that it's a big number. It's minus 1275, but the sellers didn't really pop in until down in this area right here, which is basically the very bottom here. So I wouldn't be too interested in that for myself. But if you see that price breaks the high value area here and you see sellers coming in and want to be aggressive, you would be willing to take it short. And then when you don't see the sellers piling in down here at the bottom, and then on the next bar here you don't see them piling in, then chances are you're going to get prepared for a bounce, and then it's going to probably bounce back up to this high value area here. So it's always timing those levels with what is the overall order flow telling you. Again, I'm looking at delta because it's a lot easier for me. So then as you get the bounce here, when it comes back down and retests this area here, you actually have divergence. You can see it held here. So if you wanted to be aggressive and buy that, if you saw buyers coming in, again, it's an area of support, it just tested it and held, then you could definitely, be willing to buy that as long as you saw the buyers coming in. So if you were to buy that, you would be looking at the high value area to hold. And then if this holds and then rolls over, if it takes out this low here, then you might be willing to short that, anticipating it finding its way down to the VWAP, the point of control right here. But until that happens, I would be aware that this area of support is holding. Here, again, with the area of the high value holding, you could short that as well. And then what you would have to do is just look to the left and see that's what held here, and that's what you would be shooting for. But again, overall direction is higher, so you might not be willing to be that aggressive. Sure, Jack, I'll show you those again. Let me just get through this real quick. All right, so here, back up to the high value area. This is L. I want to see the buyers coming in. And again, you could have bought down here. You had divergence. It was holding support. So if you wanted to buy there, you could, as long as the buyers were coming in. If not, you're waiting again for a break of the high value area, aware that just to our left here, that it had some trouble getting through. So you would just be aware of that. So if I were to buy this L area, I want to see buyers, and I've got buyers. I've got 427 in the way of delta. It's getting bigger. The last one was 17. So I can buy right above the high value area here, which is right here, as long as I see buyers. If I don't see buyers, I can wait and till I see the actual buyers coming in at that area. So right here we got this big red, right? You can see that, and that's on this N here. So I could buy here, I can buy here. But right here where you see this big wad of red here, just above the high value area, and price isn't going down, and you're not getting a bunch of sellers stepping up here, and it hasn't traded through these high concentration areas here, then chances are it's going to bounce. You can see, looking at the price bars here, remember I showed you earlier how I like to look at the higher concentration areas within the bar? So this would give me a heads up. Okay, if price is going to move lower, it's probably going to get stuck here and here in this general direction, if it can even get through there. So it doesn't get through there, and I don't see sellers coming in there. So here, if at the time this was really red, then I would wait until I saw some flashes of green coming in. I can get in above this bar here. I can just look at the levels here on the chart and use that as a way to get in as well. A lot of people will trade off the order flow chart. Again, up to you. I do better with the candlesticks and range charts. It's just my style. And then if you bought, again, because you saw the buyers coming in, away you go. So if you didn't happen to get in down here, then you're like, oh no, great, now I have to wait for another pullback. So I would be waiting for a pullback to the high value area here, or if I have support marked and I know that this is support, because I use multiple time frame analysis, so I can decide if I want to try to buy that if I have buyers stepping in, or wait until it pulls back to the high value area. So you either bought here or you're waiting for a pullback. Up here, again, if you want to be aggressive at this O spot here, you could short, but you know that you're moving higher. So, I mean, you get the gist. Then here at Q, you want to see buyers coming in. It's going to be the same over and over again. You get to the level, who's stepping up, buyers or sellers? Getting to the level, who's stepping up, buyers or sellers? So what you do at these different levels is going to be determined by what you see on the order flow. All right, so I'm going to show you the NQ as well. I just want to show Jack wanted to see the different types of volume in the footprint. Okay, so Jack, I just want to make sure that you're like in front of your computer, and I'll show you real quick. So this is my choice, bid and ask histogram. You got the bid and ask ladder, and everything's still red on a diagonal. So bid and ask ladder. I know Maria likes that one. And then what it will do is it will circle, square the highest concentration area. And also this is marking unfinished business as well, which is also helpful. And then delta, so each bar here is now at each price level going to tell you what the delta was. Positive 20, positive 20, positive 27, negative 14, 3, etc. And then down here it'll still give you the totals based on which one has the most. So that's the other option. Delta percentage, graduated volume. So it's going to tell you what the volume is at each price level. And then it will color, you know, darker the higher the concentration. Let's find one where we have a lot of volume here, like this morning. Here we go. So that would be obviously higher concentration of volume areas. And delta colored volume, high-low volume, and just the volume histogram. And that's that, Jack. All right, so I showed you CL where we had a little bit of a trend going on. So this is the NQ today, where this morning we didn't have any trend going on really. You know, it was trying to break higher and it would pull right back. So you could see our fair value area really flat, right? So this would be the type of day that you would be looking to see these levels hold and go from one side to the other. And then here you can see it breaks out and then it retraces back to our high value area, then down to the point of control. So it's always going to, if it comes outside the high value area, it's either going to hold and roll over to the point of control and then bounce, or it will hold, roll over to the point of control, and then find its way down to the low value area, and then that will hold, or find its way lower to the next low value area. And so generally, if it's flat, it's going to just be going boom, 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 with the point of control being the area where it could get stuck before it hits the low value area. When there's not much of a direction going on, the fair value area, because 70% of the volume, that's where it's traded, you're going to find that trades generally taken in the fair value area, it's usually in a lot of chop and congestion. So you have to have some patience in that area if you're going to expect to go from one side to the other, because you can see all these overlapping bars, you know, back and forth before it finally tags it. So you definitely have to have some more patience when you see that. But you have a pretty good idea. If you can wait it out, it's going to find its way to all these levels repeatedly, and then you're going to back it up with the order flow. So here's the high value area here, and this is early. I'm not saying anybody's trading NQ pre-market. I just wanted to find something that would give you another view based on just sideways price action. So up here, because everything's so sideways, we would be anticipating that to hold, and you can short it, expecting it to find its way to the point of control and then back down to the low value area. So here's the bar that's forming on A, and this is on a 3-minute, you guys. So you can see I have negative delta. You can see as it was breaking above the high value area here, you didn't really, and the numbers are going to be small because it's pre-market, but you can see that you don't really have any big numbers piling in up there, right? So here's that area here. So they're all pretty relatively small numbers. And if you wanted to wait until it traded back under the high value area and get in under this bar here, you don't have to leave your order sit right there, you know, as a standing order, because still at this point you don't really know, is it going to hold this and then take off higher, or is it going to hold it and roll over? So just based on the direction of the fair value area, my assumption would be that it would hold and roll over. But, you know, the market makes liars out of us all the time, so we don't really know. So then we get down to the lower end here. I don't generally look for anything around the point of control because it can get stuck there. It's just a sloppy, ugly area most of the time. But if you're okay to trade that area, when you see this retrace back up there, if you see sellers coming in, you could short that, anticipating it finding its way to the low value area. So again, up to the individual, you know, how aggressive they want to be. So here's B right here, where we're consolidating and it's holding. So I'm thinking that probably I am going to be looking for some buyers coming in here. So here on B, I can see it was minus 70 prior to that, and then minus 212. That's in this general area here. And then we're to minus 8. So you can see that our negative delta is pretty much almost gone. It's almost positive, right? So I can go ahead and I can buy that. I can wait until I see positive, but you know, this started out much bigger and it went to minus 8. So let's say it started at 200, minus 200, you know, minus 150, minus 130, minus, so you can see the numbers getting smaller as it's happening real time. So this basically isn't much of a negative delta. So you could go ahead and buy that and then anticipating it to the point of control. And if it can't get through the point of control, then you're looking for it to find its way back down here again, and you can buy it again. It didn't quite tag it, so you may not have been able to buy this area yet, or you could still be in from back here, depending on your patience. As it gets to the point of control right up here, which is right up here, you can see that there aren't really any buyers at the moment anyway coming in up here. So you probably wouldn't try to buy off this area. If you wanted to short, you could, but the negative delta is still, it's not very large. So then we get to C, comes up to the high value area here. Now I prefer it to kind of do this, try to get through it and then fail. I prefer that because that gives me a little bit more confidence in the fact that right here you can see it tags the high value area here on C, and then it pulls right back to the point of control. But the way that I view this in my mind is that, yeah, it held the high value area, but it still could try to pop through before it rolls over. So this is more my style. Let it try to get through and then have it fail, and then I want to see some sellers coming in. Also, I'll point out right here from C to D, I got a higher high here than here, while on my stochastic I have a lower high here than here. So I'm already got a heads up that this is going to pull back, so I'm looking for this area to hold, and I want to see some sellers coming in. And I really don't get them on this bar, right? I don't get them until here on the next bar. So chances are you could pass on this if this isn't negative enough or low enough, but odds are good that it actually started out much higher and came down to 234. But if you're worried about it, then you wait for it to test it again. Up here is E. Up here is E, the high value area. It's actually the second high value area. It's not going higher. You can see you're not getting the buyers to step up here. This is a pretty small negative, positive number. So this is probably a good place to try a short. It's not going higher. And then you can see it's been holding the point of control. So that's going to be your area of concern. It's going to pull back to the point of control. It's going to pull back to the point of control. It's going to pull back to the point of control until it breaks through it. And then you find your way down to the low value area again. And that's where you're going to look to try to buy it. And that's at G, and that's right here. You can see negative, and then it goes to positive right in this area here. You can see that you don't get a bunch of sellers stepping in under the low value area here. So you could go ahead and buy it. You can see right here you do get some concentration of sellers, but it doesn't push it down. So you would buy it anticipating, again, point of control, then back up to the high value area, and then it pops through it. You had all the time in the world here, back here, where it just is kind of meandering, you know, back and forth, back and forth, back and forth, whereas here it pops through and just keeps on going. So if you were looking to think that you were going to buy that, then you would want to see a boatload of buyers coming in on that. And you do get a bunch of buyers, but at that point you don't know that it's going to take off. So you just have to be aggressive. And if you were thinking that, you know, you were going to give it a couple bars and see what happens, it doesn't really give you the opportunity. So now you're going to have to wait for a pullback. Then here again at H and I, we've got divergence up here, higher high here than here, lower high here than here. We still really don't have much of a direction overall. This is the first movement that it attempted. So it's really not that risky to short this based on having divergence and seeing sellers coming in. You could see that it goes from 669 in the way of positive delta to negative 130, and that's right here, is right here. Up here you don't see the buyers stepping up. Up here you can see you're not getting them above that high value area. So once you see it go negative, you could short. You could short under this bar here off your entry chart. And so if you short that, that area up there, you would look over here to the bar next to you. You can see that you got a high concentration of volume here, high concentration here. So this would be your area of concern. And that's right here at our high value area. So that's probably going to be where it's going to get stuck. Let's see. Greg is, JR is asking, what are the gray with red box under buy or sell delta? This is just what I put there for reference so people could see where I was looking here and which bar here coincided with that, JR. So I'll just put this back here. And I've got that pretty stretched out there. There we go. So this is real time, but the market's closed, so it's not going to move. But this is the end of the day. And then, so that's it, pretty much in a nutshell. The key is to know the levels, where they are, and then see who's stepping up in those areas, buyers or sellers. And that's it. So if it's buyers, you're going to buy the level. If it's sellers, you're going to sell the level. Right, it's my mark, exactly. I marked it for reference so you could see which bar I'm talking about here at G, for example, where it hit the low value area, coincides with this bar right here hitting the low value area. So I've been using these tools for about 2.5 years. I guess it was 2 years in August. I'm very happy with them. I know that there is a boatload of choices out there. I'm just going to go over this real quick, and then I'll give the mic to Maria, and she can answer any questions that you have. This here, she has a lot of different options for purchasing the tools that you just saw. What it includes is the order flow and market profile software. That's what you were just looking at. And you can have it where the training room is included or not included. So she has a lot of purchase options. So if you're interested, just give her a shout via email, and she can, fine tune it for your budget and see if it can fit your budget. But you do have the option of her training room, which is open Monday to Friday, 4 a.m. Eastern, believe it or not, 4 a.m. Eastern to 11:30 a.m. Eastern. And anybody who orders the software by Friday the 25th will get $300 off the package, and then free installation and software. And then she's going to give you free MR lines. I don't have them on these charts, but they are crazy accurate areas that it'll just blow your mind how well they hold. Developing market profile, and then the chubby bars. The chubby bars are these, like I was saying, they were before, somebody was asking about them getting fat or skinnier. They're chubby bars. So the fatter they are, the more, if it's red and fat, you have more sellers coming in. If it's green and fat, you have more buyers coming in. If there's not a lot of volume here, you can see it moving lower, but their bars are all skinny. Now here you see them getting fatter. So this is based on who's stepping up, buyers or sellers. And I think I covered everything that Maria wanted me to. Oh wait, there was one more thing. She has these price levels that she subscribes to. She gets them from a quant mathematician, I believe, based on market profile, and they get sent out every day. And she offers a membership on those. There's only 10 memberships open for that. If you want more information on that, I don't have anything like that on my charts. I don't get those. So you'll have to talk to Maria about it if you want to get some examples or sample charts or something on those. But there are levels that are outlined for you before the start of the day, and you'll be looking to buy or sell those. They're based on a lot of different information. So that would be something that you might be interested in. And then with the package, the regular package, you get divergence delta, market profile, order flow chart, price action, and the VWAP market profile. All right, so Maria, I'm going to give you the mic, and if you have any questions, type them in and Maria can answer. Okay, Maria, it's all you.
Hi, everybody. Thanks for spending this hour with us. If anybody has any questions, lots of familiar faces, some new ones. If anybody has any questions, feel free to type them in. I found the button finally, and I'll answer them.
Let's see. No, she doesn't trade only the NQ, and I don't only trade the NQ. That's just what I brought up, Lawrence, was because of I wanted to show a sideways market.
The package runs on Ninja software, Amos, but you could trade off an Infinity Dome. Like you could get a Ninja demo or fund an account with very little money, get the data, and then trade off your Infinity Dome. Lawrence, we trade crude, euro, NQ, and the plan has NQ, ES, gold, crude, and euro. And I'm pretty impressed with the plan. If you want, you can send me an email. I can send you many examples just from today. It was a phenomenal day.
Excuse me, Amos, that's what I do is I have my account with Infinity. I have one with AMP as well, but generally I'll trade out of my Infinity account and just have my market profile stuff up. That's Ninja. It doesn't matter. You know, you still place your orders on your Dome for Infinity and just use Ninja charts. So if anybody, you know, if we didn't cover something, let us know by email. You can send me an email. Sam, shoot Maria an email and she can go over the different package prices. That would be the easiest way because she has lots of different
Yes, Sam,
options.
just, that's my dog, Zach.
Maria. All right, you guys. Well, if you want to take advantage of this, it's going to expire on Friday, I think at midnight, Maria said. So like I said, I love the package, the software package. I'm happy with it. What's nice is that it's not a lease. It's actually yours. A lot of the order flow and market profile stuff out there is a monthly lease that is never ending. So, you know, I like it. You could check it out. And any other questions, shoot Maria an email. Shoot Maria an email about the price of the package because she can customize it based on your budget to see if it fits your budget because she has a lot of different options available, JR.
Yeah, JR, drop me an email and we'll try to accommodate most people. You don't have to stay for 6 months. You could just buy the software only.